Question. An expenditure that benefits only the current period is known as a capital expenditure, revenue expenditure, current expenditure, deferred expenditure. Revenue expenditure. An expenditure that is not written off in one accounting is termed as capital expenditure, revenue expenditure, current expenditure, deferred expenditure. Capital expenditure. An expenditure that benefits several accounting periods is a capital expenditure, revenue expenditure, current expenditure, deferred revenue expenditure. Capital expenditure. Expenditures incurred on advertising a new product are capital expenditure, revenue expenditure, current expenditure, deferred revenue expenditure. Deferred revenue expenditure. Carriage paid on goods purchased is a capital expenditure, revenue expenditure, capital loss, deferred expenditure. Revenue expenditure. Building destroyed by fire is a capital expenditure, revenue expenditure, revenue loss, capital loss. Capital loss. Taking a bank loan to acquire a fixed asset is a capital profit, revenue profit, capital receipt, revenue receipt. Capital receipt. Revenue expenditures are shown in the trading account, income statement, balance sheet, none of the above. Income statement. Capital expenditures are shown in the balance sheet, trading account, profit and loss account, none of the above. Balance sheet. The basic purpose of preparing trial balance is to find out the profit of the business, to show the financial position of the business, to test the arithmetical accuracy of the ledger, to calculate the net purchase of the business. To test the arithmetical accuracy of the ledger. Which of the following is correct about an agreed trial balance? Both debit and credit aspects of each transaction have been recorded. The books are arithmetically correct. The debit and credit columns of trial balance have been correctly summed. All of the above. All of the above. Which of the following is the correct sequence of the accounting cycle? Journal, trial balance, ledger, transaction analysis. Transaction analysis, journal, ledger, trial balance. Purchases, journal, ledger, trial balance. None of the above. Transaction analysis, journal, ledger, trial balance. A trial balance prepared after taking into account the effect of adjusting entries is known as financial trial balance, adjusted trial balance, unadjusted trial balance, normal trial balance. Adjusted trial balance. The two methods of preparing a trial balance are financial method and total method and normal method, balance method and financial method, balance method and total method. Balance method and total method. In addition to the arithmetical accuracy of ledger, a trial balance provides options: a summary of total capital invested in the business during the period, a summary of sales made during the period, a summary of total cash collected from customers during the period, a summary of all transactions made since the end of the previous accounting period. A summary of all transactions made since the end of the previous accounting period. Which one of the following is the most popular method of preparing a trial balance? Balance method, total method, trial and error method, line method. Balance method. Under the balance method, which one of the following is used to prepare the trial balance at the end of an accounting period? Options: beginning balances of ledger accounts, ending balances of ledger accounts, total of beginning and ending balances of ledger accounts, differences of beginning and ending balances of ledger accounts. Ending balances of ledger accounts. Under the total method, which of the following is used to prepare the trial balance? Options: total of the amount columns of ledger accounts, differences of amount columns of ledger accounts, opening balances of ledger account, closing balances of ledger accounts. Totals of the amount columns of ledger accounts. Which of the following errors in the journal entry will not be detected by trial balance? Options: the debit part is overstated but the credit part is correctly recorded. The debit part is correctly recorded but the credit part is overstated. Both the debit and credit parts are overstated by the same amount. The debit part is correctly recorded but the credit part is understated. Both the debit and credit parts are overstated by the same amount. Which of the following is placed in the credit columns of the trial balance? Purchases, rent expenses, furniture, sales. Sales. Which of the following is placed in the debit column of the trial balance? Capital, accounts payable, salaries payable, none of the above. None of the above.